What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So this is my second dividend portfolio. This is my etrade dividend portfolio. And I promised you that I would reveal to you a stock, actually a REIT that I sold. Tomorrow I'm going to reveal to you the REIT that I bought with it. And I'll reveal to you my losses for tomorrow and how I feel about this new buy tomorrow. But I had to promise you I'm very transparent with my buys and sells. I had to do it. And there's a lot of promise with it. There's a recent news about a dividend cut, and it just started to drop in price per share, and it grabbed my attention, and I'll take a little bit for a tax loss harvest. I mean, my returns are really good. I'm already up a pretty good amount. And my portfolios are starting to go up. As you can tell, my gain is 1.16% now. On eTrade, it was in the negative because I was buying dips, and you have, Realty Income was taking a hit. Now they're starting to go back up. So there's a lot of confidence in the market. It appears to be. Of course, I'm not giving financial advice. So let's go over this cheap stock right now. The one that I got rid of was Sachem Capital Corp. It's sitting at 269. It's dropping more and more and more. The average volume is 368.25K. Market cap is 140.08 million US dollars. Fee range is 243 to 464. Day range is 261 to 272. Previous close is 261. So let's look a little bit into them, and I'm going to explain to you my rationales as to why I got rid of them. So first, Sachem Capital is a Connecticut-based real estate finance company that specializes in originating, servicing, and managing a portfolio of first mortgage loans. So with their investment criteria, they primarily rely on relationships with existing and former borrowers, real estate investors, banks, real estate brokers, mortgage brokers, attorneys, and web-based advertising to originate loans. Many of the borrowers are repeat customers. When underwriting a loan, the primary focus of their analysis is the value of a property. Prior to making a final decision on a loan application, they conduct extensive due diligence of the property as well as the borrower and its principals. In most cases, they will make an on-site visit to evaluate not only the property, but the neighborhood in which it's located. Finally, they analyze and assess selected financial and operational data provided by the borrower relating to its operation and maintenance of the property. So there are factors that, for the loan consideration, their decision is based primarily on conclusions regarding the value of the property, which takes into account such factors as the neighborhood in which property is located, the current use and potential alternatives of the property, current and potential net income from the property, the local market, sales information of comparable properties, existing zoning regulations, and the borrower's experience in real estate ownership, construction, development, and management. So let's go over a few things that are concerning. I'll just go over their income statements quarterly. June, it was up 27.53%. September, 31.94%. December, it was down 67.10%. And revenue was up 8.87%. So annually, revenue was down 1.90% in 2023. 2022 was up 53.09%. 2019, it was up 2.10%. 2020, it was up 28.22%. 2021 is up 53.21%. That's not bad, but we have to go over a few more things. There's a few things. So this is on marketwatch.com. Stock was down 11% to $2.57. Shares have dropped 31% since the beginning of the year. The Mortgage Real Estate Investment Trust said its board of directors declared a quarterly payout to shareholders of 8 cents a share, down 27% prior to the dividend of 11 cents per share. The new payout, equal to 32 cents per share annually, represents a yield of 4.6% based on the company's latest closing price of $6.89. The company said the dividend will be paid on August 6th. Now let's go to the dividend history. In 2018, quarterly dividend was 11 cents, jumped to 12 cents, and then it was a special dividend and it appears at 17 cents. Then it was consistent at 12 cents. And then in 2022, it was 14 cents, 13 cents, then it dropped to 11. So I'm concerned a little bit. Again, funds for operation is very important with mortgage-backed REITs, but the price per share is dropping. The yield is 16.86%. And again, with this price of them, it's $2.70. And if it keeps on dropping, and I see a potential risk of a dividend cut. Now, will I buy them again in the future? Possibly. But I had to sell them. It was just the right time to sell them. And again, I always say, if something drastically happens, a dividend cut, or things just aren't looking good, I will sell them. And I sold this one. I'm going to reveal to you tomorrow what dividend stock I'm buying. Actually, a REIT that I'm buying with its income. Now, don't get me wrong. In the future, Sachem Capital could be a good income REIT, to use its income to buy dividend growth stocks. That's kind of what my goals are with these types of mortgage-backed REITs and real estate investment trusts. But it's just not time. It was a good time to drop. It's things, hopefully things recover, but I just don't like the way things are running right now. The revenue trends aren't bad, but that cut and that decrease in price per share is a little concerning for me. So I looked at some trends. I don't like them. Sold them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. I'm going to jump to my disclaimer. As a reminder, do not use this YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. You don't have to buy stocks because I buy them. Okay, I'm just making that clear. Do not use this YouTube channel for any form of tax advice. Investing is a big risk. You can gain money, you can lose money, so be aware and make sure you do your due diligence when it comes to investing. It is best to seek financial advice from a financial advisor and a tax advisor for tax advice. So go to a financial advisor, go to a tax advisor. Don't use my YouTube channel. Again, I invest in high yield dividend stocks. If a dividend cut happens, something drastically changes, I will sell a stock. So I'm just making that clear that my channel is for entertainment purposes only. This is my passive income journey, my dividend investing journey. And I'm just being very transparent with you that you can lose money when it comes to investing in the stock market. So be aware and do your due diligence. Take care and have a good one.